The entire global economy is looking weak. There have been mild upswings over the past 2 years, but ultimately it has been falling further and further down. There is no possibility of central bank intervention actually supporting an economy. Printing fake fiat money and buying toxic assets simply doesn't benefit the average person. In the next recession, central banks will be overwhelmingly pursued to buy assets of all kinds, stocks, bonds, and who knows what else. It's only a matter of time before their intention on owning everything comes to light. You came here for the truth, so let me unveil that for you. Today we're going to look at what's happening in the real economy. There's a big difference in the economy and the markets. See, the markets get supported by central bank intervention, whereas the economy simply cannot. And we see that as an example today, right now, where they have been printing trillions upon trillions of dollars, and yet the economy is looking weak. If you see the deficit spending that is being done by the governments, this hasn't helped much either. We print up hundreds of billions of dollars if you look at the example of the United States, and yet you get less and less GDP growth. Of course, that statistic on its own is manipulated, but if you keep within that frame, you can see it and track that progress. Not looking good when you have to go deeper and deeper into debt, you have to expand your deficits, and all you get are scraps. Now, it is very clear to me and to those who have been paying attention that central banks want to create a crisis so that they can swoop in and be the saviors and buy everything for pennies on the dollar. They don't have your best interests in mind. They do things as they see fit. Now, I want to look at the store closures today in the United States, but I also want to talk about what's happening globally. We're going to look at Hong Kong. We're going to look at China. We're going to look at Germany and a bit of Italy, a couple companies in here as well. I'm going to track the progress on a lot of different issues. Let's get into it right away. Directly out of CoreSite's website, you can see that the current tally for the store closures is at 8,993, 3,780 for the store openings. I think it's important to look at what's happening with these store closures. A lot of individuals will simply say this is because of Amazon. Well, I've covered it so many times before. Just want to make it very clear that in 2018, virtually the same amount of people were using Amazon. Yet we have much more store closures. In fact, we can see that this will probably double last year's. At the same time, to be very clear, 5% of total retail sales are from Amazon. That is the statistics that I have pulled up for you. I have shown you that data documented here on the channel. Let's move on. Hong Kong has plunged into deep recession after its economy was hit by a double whammy of what was happening on the streets and the US-China trade issues. Activity contracted by 3.2% in the 3 months to September as a loss of exports was compounded by a collapse in consumer spending and a loss of revenue from tourists. I'm going to show you some data on that in a minute. I have some charts. But the reason I wanted to note this is that we are feeling the effects of this globally. When people are upset, they take to the streets, and then you have an economic contraction. Now, it could start from an economic contraction in the first place. It could be a political issue. It could be something that happens because of a natural disaster. Anything is possible. But ultimately, the fact remains is that weakness and fragility are always present. Always present. You can't get around that. How robust your system is, the protections you have in place, whether that's on an individual level, maybe in your community, the country as a whole, and so on. All of these need to be there in order for you to withstand a crisis. We saw in 2008 how weak the United States really was. Because of the subprime issues, we found out how intertwined all of these financial institutions were, and it created this tectonic shift of the plates, completely disrupting the entire global financial system. Today, these institutions are even more intertwined. intertwined. It is very frightening, but you have to understand this on a global scale. You can't say, I'm from this particular country, I don't need to look at those other statistics. No, all of these corporations are globally intertwined, and I will continuously bring out the data here on the channel. They make it very clear in here that this is a real recession, not just a technical one. So I wanted to make that known to you right here, just because of all the examples we have had in the past, just showing the data, and it looks weaker and weaker and weaker. And now in this particular case for Hong Kong, it has hit very hard. This is their GDP quarter over quarter, and you could see that we are going back to financial crisis levels. It could persist, it could turn back up, who knows? I will be providing you the data as it comes in. Indicators signal stabilization near lows. This is the year-over-year change, and if you can see those numbers, I know it's a bit small, below 50 shows deteriorating conditions. There are three things on here that I wanted to note. In the top right corner, the PMI. Globally, this has been a big problem. In the bottom left corner, visitor arrivals. Of course, they're seeing what's going on in the news. People have been staying away from Hong Kong. That's not good for the tourist economy. Bottom right corner, you could see their currency deposits have turned over. Perhaps individuals are starting to move their money elsewhere. Hong Kong retail sales, you can see that this has contracted significantly. This is a percentage change, and it's going down to a level of minus 25. Just to give you an idea of what's happening here, retail sales are obviously so important for any economy. That applies to not just the United States, but in this case here as well in Hong Kong. Rural Chinese lender cautiously reopens for business after averted bank run. Now, in this example here, they said it was totally false, no reason to worry. Somebody started a rumor, and then everybody went to the bank to start to pull out their money. The last time I did a video about this, a different bank had some issues. People started lining up, pulling out money. I saw the comments saying, this wasn't real, this never happened, this is the smallest bank ever, nothing to worry about, and just spreading straight up hate. Now, what I'm showing you here is what could happen potentially. When you see these type of events, it doesn't matter if it's legitimate, it doesn't matter if it's contrived. What you have to focus on is the fact that your money's in that bank and you trust them. You believe that the day you need to pull that money out is gonna be there for you. Once you give up your cash to the bank, it becomes theirs. You might get it back, you might not. Time will tell. I thought this was really funny. It was talking about the US-China trade issues. Take a look at this. Whenever you see a lowering of trade deal expectations, it's going to upset markets. Here we are at new all-time highs, so the sensitivity to any type of headwind in the US-China trade tariff negotiations is going to be an overreaction. Of course, I think he forgot to mention the fact that the same headlines over and over and over again have been priced in to what the stock market is at right now. How many times has no new information surfaced, nothing concrete whatsoever, and yet the market traded higher on it? Any little bit of information that comes through that's negative, the market reacts for maybe an hour and it's back up again. It shows you the level of manipulation that is going on today. German exports to shrink next year, first since the global financial crisis. That's according to Germany's own government statistics, just showing you that there is complete widespread contraction that is occurring. Despite what some people want to believe, this is what's actually going on. I'm showing you the data directly from the sources themselves. If there are those that don't want to believe it, well, that's okay. World record in negative rates has bankers testing no man's land. And this is talking about none other than Denmark. After more than 7 years of negative rates, some of Denmark's biggest banks are resorting to uncharted territory in order to cope with the extreme monetary regime. At Sydbank, the CEO said that they are going to pass negative rates to a number of retail depositors and possibly even cut the rate on their accounts below the central bank's benchmark of minus 0.75%. How does that sound? You put your money in the bank and it's a guaranteed loss. You're already taking such a risk, and yet they are willing to cut a little bit more off. I'm not sure that's a very good deal. Pirelli Tires cuts guidance, delays business plan in worsening scenario. This is an interesting one because it is part of the auto industry, but not necessarily a car manufacturer. So you get that secondary level of that data that I really like to look at. This happens to be just one more in connection with this here. Ford to lay off 450 workers in Canada as flex production ends. This is just another one in the list. How many times have we seen these companies laying people off? It happens over and over and over again. Yes, I get it. They're switching production here and there. Ultimately, less people have jobs. That's all I care about. This 450 workers was actually in addition to another few hundred that happened just a few months ago. So they continuously pile up here, and these are well-paying jobs. Now we're looking at the United States. I always think it's funny when the Federal Reserve talks about inflation. When they say the word inflation, I hear fake. When they say inflation, I hear fake. Over and over again. It's funny. But if I was at one of these conferences, I'd be giggling the whole time. You can see that it actually declined slightly to 1.6%. Now this is extremely low, and all because of the way they are able to manipulate these numbers. If there's a problem with any of them and they look like they're gonna go too high, they can simply remove it from the calculation. The core PCE rate, which is supposed to be personal consumption expenditure, doesn't even include the things like food and energy, which in my opinion are so necessary, and yet they exclude them because they're too volatile. Whatever. Chicago's PMI 8-month change has never been this bad since the 80s. What are we talking about here? You're looking at the PMIs going down in a contraction that hasn't been felt in decades. It is significant, but here we are today, negative yields spreading to corporate debt. I think it's really important to understand what's happening in the financial system because all of this is interconnected and intertwined, as I've said. The amount of negative yielding corporate bonds has expanded dramatically in 2019 alone. What is also important to note here is the BBB. That's the yellow section, and that has truly skyrocketed. Why this is important is that these BBB rated bonds, which are literally just sitting above the junk rating, are expanding so dramatically. But a lot of these funds cannot hold junk bonds. So if they get downgraded, they have to sell. So a lot of these companies right now, they're doing their stock buybacks, they're financing all of their schemes based on the fact that they can sell debt to those crazy people who want to buy it. Now, all these investors, if they see that it's in the junk category, maybe they're not going to be able to get in. Maybe they have to sell. Suddenly, everything changes. This is so important to keep an eye on. I will be tracking the progress here. That's all for this video. If you found it informative, hit that thumbs up button. When you give me a like, you're supporting this channel. I do appreciate that very much. If you want to learn how to build a business, how to make money, how to learn the system of Amazon and not have to pay a dime, the Amazon GPS is a free e-course that I made just for you. Check it out at theamazongps.com. If you're interested in the financial system, in learning about the history, about the foundation, about the 4 asset classes, everything in between, these 2 books have what you need. Check them out at the link in the description. If you want the audiobook, that's available at themoneygps.com. Wait a second, hold on, don't go anywhere. Have you seen this video? It contains a lot of data that connects with this one. Definitely click on it and I will see you there.